things are calming down economically a little bit. People are feeling better about the markets, the economy, even though I don't believe it personally, but it's making people think, okay, maybe we don't need as much safe haven demand as gold is, and it's bringing it back in. But I'm a firm believer this is a buying opportunity.
We're taking a regular look at the charts with Chief Market Strategist at Verified Investing, Gareth Soloway. Gareth, welcome back to the channel.
Hey, thank you for having me back. Great to be here.
It's always great having you on. We haven't spoken for a few months now, and a lot has happened, particularly in the precious metals markets. Let's dive straight in. Pull up a gold chart for me if you would do, and let's have a chat about that.
Yes, absolutely. Yeah. So some wild action just over the last couple months. We saw the big breakout that last time I was on, we were talking about, right? I mean, you
Indeed.
couldn't get a better resistance here at this 2075 level. It kept hammering since 2020, then 2022, again in 2023. And then we kind of tried to pierce it, failed, but this was a classic little bull flag development where it just stayed so close. And once it broke, we know, the rest is history, as they say, with just that monstrous move up to about 2,400 and change. And really, what we're seeing right now is just some profit taking, right? I mean, things are calming down economically a little bit. People are feeling better about the markets, the economy, even though I don't believe it personally. But it's making people think, okay, maybe we don't need as much safe haven demand as gold is, and it's bringing it back in. But I'm a firm believer this is a buying opportunity. I have a couple levels I can just divulge here. So,
Go for it.
again, so just to be clear with everyone watching, I have a large position of physical as well as longer term holdings in the metals, but I do swing trade it, right? So this is what these levels are for, is when we pull back to these levels, I pick them up as swing trades. And so first level, you can see right here on the chart, see how it kind of bubbled here and consolidated before the next leg up. What
Yeah.
that tells me as a chart trader is that that's support. So I'm looking at a pullback to about 2200, 2190. That would be an accumulation zone. And then I don't know if it will pull back here, but if it ever did come back to the ultimate level to retest this would be a huge level at 2075 to 2080.
And what do you think the chances of that? I mean, a lot of people are saying that's it. That's the last time we're going to see it go below 2100.
Yeah, I think it's possible, right? I mean, it's so hard to know because you get a dollar pop or you get, kind of a scenario where, the belief that we're engineering this great recovery and, people don't feel like they need to have the safety of gold, then it can bring it down in a quick flush. But for me, I'm not banking on it. I think maybe 50-50 chance of a retest there. I think the 2200 level is much more likely, and that'll be where I start to really accumulate. But the 2075 is 50-50 at best.
We're starting to kind of go trade sideways a little bit here for the last couple of weeks in gold. It seems to be it could be forming a base for another move higher though as
Yeah.
well, couldn't it?
And that's exactly what you want, right? So anytime you have a big move like this, if it were to continue going, it's not healthy for it. It's much better for it to kind of stall out, pull back a little bit, and just kind of digest the gains. And I always use the analogy, like if you're someone who runs a marathon, you can't really run a marathon and then just right away run another marathon. You got to kind of relax, you got to rest, you got to refuel, and then you can make your next big run. And that's what charts do, right? So they go up in these parabolic moves, but then they need to digest those gains before they can make their next big move up. And I think that's what's coming. And I mean, you look at the US debt, you look at debt to GDP numbers of all around the world. You look at the Federal Reserve now still, we're even starting to factor in now two rate cuts again and more printing of money. And all of it points to the precious metals as being a place to kind of hide out over the next 5 years or so.
Next leg higher in this, where do you think it gets to?
Yeah, good question on that one. So the only thing I have, there's a 20 just above 2,500. There's the conclusion of the head and shoulders pattern. So just to kind of go over this for everyone to understand is this pattern, and why I recognized and was able to call the breakout is because it's a pattern that occurs in charts all the time. And what
Mm.
we could see here is it's a shoulder on the left side, and then the head is the deepest one, and then the shoulder here. And again, you can really see how it's a shoulder, head, and shoulder. And it's called an inverse head and shoulders pattern. And it's a bullish pattern. And the way I calculate my targets is simply we do the low of the head right here to what's called the neckline, which is this break point.
Hmm.
And that was about $450. And then the same thing you would do here is you would add that same 450 to the breakout point. and you would get your target. So approximately 25.30 to 25.40 was my starting point target for 2024. And listen, we got so close already. It's pretty amazing. But that's kind of where I'm sticking at this point, and then maybe I'll raise it once we achieve it. But right now, 2,500 and change to me is easily attainable by year end.
Right. Okay. Excellent. Maybe you might pull up a silver chart because silver has, let's say, it's not had the same good fortunes as gold has, but still, it's making an effort to break out there, isn't it?
Yes, yes. And we retested. In fact, let's clear off. I'm going to clear off. I always like to start it fresh here. So here's your chart of silver. The first thing that you have to note when you look at silver is that you have your high pivot here from 2020. And this is the equivalent of gold, right? The only difference is gold has broken out, silver has not, right? But what silver did do is it did test this upper range right here. And again, it got rejected at the $30 level. Now, if we flip back to gold, notice how gold was a much stronger chart. This is that same line, the same high from 2020, and it obviously has already broken out. So it does tell you that silver is a little bit more, a little relative weakness to gold's chart. However, I will say that eventually I do expect silver to break out as well. It's just a matter of time. So my guess is the next run on gold, well, when gold is consolidating, we're seeing silver do the same thing, right? Still
Mm.
consolidating here. When gold breaks out and makes a new high, that's probably where silver finally takes out that $30 level. And then I actually think there could be a short squeeze on silver. There's a lot of shorts in silver out there. Institutions are known to be short silver that might be trying to hold it down. Once they have to start to cover, you could see a pretty quick move to 35 or $40 an ounce on silver.
Just, these things don't happen in a vacuum.
Right.
Let's have a look at the stock markets now. Give us your thoughts on that.
Yeah, absolutely. And so, the stock market is a tricky scenario here. We have a stock market that had a pretty big correction on the S&P, almost 10%. I think it was 8.8 or so on the downside. And then from that point on, we've actually recovered pretty nicely. What
Mm.
bothers me about this recovery, and I'm not buying into it, I think, again, this morning we saw Disney earnings and we're seeing the consumer starting to pull back. Last week was Starbucks. Obviously, coffee's pricey, and especially Starbucks coffee, and people are backing off of that. We saw Expedia, which is a travel website, miss earnings. We've seen Etsy, which is a kind of like online, self-do-it retailer making crafts and different things, and they missed earnings. And so, what this is telling me is that the consumer is finally starting to crack here in the U.S. and really globally. And I think that that is not a good sign. Now, the markets are loving it because they're like, oh, this means the Fed can come in and print money and lower interest rates. But in general, if you're looking at price to earnings multiples on stocks, that's based on consumer spending. I mean, the backbone, and people have said this for decades, the backbone of the US economy is consumer spending. And so if that is really starting to crack and we are headed towards a hard landing, that's not going to be good for stocks in the longer term. So just something to keep an eye on here as we watch this market. But again, big bounce here recently. I personally don't think we'll make new all-time highs. I think we're going to roll over in the S&P.
So you don't think we're going to make a new high here? So we could just see it's a partial recovery rally back, but we're not going to see it. It could fail out before we
Yes.
get back to that top point there. Um,
Exactly, exactly. And then listen, is it possible we double top? It is possible we do hit it, touch a double top. But again, the bigger signs for me, I mean, the market just wants its cake and to eat it too, and investors want that. They want the Fed to print, but they want corporate earnings to stay strong. And again, those things won't mesh because if corporate earnings stay strong, it means the consumer spending and then inflation is going to stay higher. And the Fed then can't lower rates. And if the economy finally cracks and we go down and we have a recession, then yes, the inflation side should come down a little bit and maybe the Fed can lower it, but you can't have both together. And I think that's something that investors are trying to or not really understanding at this point.
and let's see if we can try and square the circle on this. Have you got a dollar index chart? Because we've seen
Mhm.
the dollar looking pretty strong of late.
Yes, yes, absolutely. The dollar's had a pretty impressive run since last December. You've had your up moves, your pullbacks, your higher highs. We're getting one of those pullbacks. We do have resistance up here about around 107. I think what the dollar's showing us here is maybe even a flight to safety with its relative strength. One of the things that is catching my eye is the dollar yen and what's going on there. And
Yeah,
Japan now,
major moves.
yeah, we had this amazing breakout. Look at this pivot high here going back to 2022, touching right here in 2023, and then the breakout, and then we saw the intervention. The Japanese central bank intervened, pushing it back down, and now we're starting to move up. And what people also don't understand is that the way Japan is going to have to kind of support their currency is by selling US debt. They're the biggest holder of US debt out there. And one way to support their currency, if they want to get it to support it, which they seem to do, or they seem to want to, is to sell that debt. And if they sell that debt on the open market, it's going to cause interest rates to stay elevated here in the US, regardless of what the Fed does. And that's another potential black swan type situation that could be on the horizon.
There's kind of the Fed losing control even further of the long end of the
Right.
curve then.
And
So you've
that's
got
some that's right. And that's something the markets are really not even thinking about is they assume the Fed has full control, they're behind the wheel, they're guiding us. And again, they have to people should realize that yes, the Fed can guide us when things are calm and the waters are okay, but it's when things get out of control that the Fed can lose control. And we saw that in 2008 and 2009. The Fed did lose control for a little bit of time there.
if you have it there, have you got a chart of the GDX?
Yes, absolutely. Let's take a
It's
look.
an interesting one because I think we're starting to see a little bit of a move on there. It has been lagging considerably behind gold, but of late
Mhm.
we're seeing a bit of an attempt to a move higher.
Yes, absolutely. And I think this is the beauty of it, right? Is one of the reasons the miners lagged so much over the last few years is because gold was not breaking out. It was stuck in that range, that sideways, 1900 to 2075 range. And while it was stuck in that range, we had inflation just continuing to go up and up. So the poor miners, right? I mean, they're paying their people more, the equipment costs more, everything costs more, and gold's not going up to compensate them. So they were underperforming gold. Now, the key is if gold, based on its recent move, and if it does have another move up, it's going to outpace inflation, which then will be the reverse move. So the miners should do really well. I love this pattern. It is at the
Is
high end of resistance here, but this is a
yeah.
very consolidation, bullish base building
It
again
looks a bit
on the
of a
miners.
you spread that out. It looks like a bit of a diamond pattern, is it? A bit of on
Yep.
the right hand side of that chart. So it
Yep.
could be bullish for a significant move higher.
Absolutely. And what's interesting here is we had this trend line here, and you can see the breakout that it did occur from this high down to these highs, down to this high. And then you can see you did break out. And so for me, you could buy it here, which is fine. I'm more of a swing trader, so I really try to pinpoint the exact levels versus a long-term investor. But any sort of pullback into this $30 range, tons of support here. This would be like an amazing entry if it comes back into this level.
Yeah. Before we wrap up, what's the one thing that you are particularly looking at the moment?
Wow. So I think for me, it's kind of monitoring. So there's a couple things. So economically, on the macro basis, it's obviously following inflation, jobs numbers, stuff like that. But for me, it's also noticing that we've just come through earnings season for the stock market, and more companies have lowered guidance this quarter than since the pandemic, the 2020 pandemic, and that's catching my eye. So those things are kind of a little bit of a wait a minute, what's going on economically here? And then going to charts, I mean, I do think that again, miners, gold, silver, platinum, palladium. In fact, let's touch on platinum. Actually, palladium is one of my favorite charts here. There's some really good price action where you haven't seen the breakouts that you've seen on gold yet or
Yeah.
silver attempting. But to me, this could be a hidden gem down here on the palladium and platinum charts. They're still in their lower basing patterns and they haven't broken out yet. And, if you go back to where these things were trading even in 2020, way higher versus silver hit its 2020 high, gold is broken above it. And just again, an idea that I'm looking at to kind of accumulate down here some of these kind of forgotten metals. And they're not really forgotten, but to investors, I think they're forgotten.
Remind us of the website again.
Verifiedinvesting.com.
Gareth Soloway. Thanks for joining us on the channel again this month.
Always a pleasure. Thank you so much.